The apartment market is in crisis. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at a few articles which are discussing the crisis in the apartment market, particularly in certain areas around Australia. Now, before we have a look at this, I'll just draw your attention to this latest building approval data from just August from the RBA, or the ABS, and the RBA referring to it as well. You can see the private sector dwellings excluding houses. Look at that plunge. That's apartments, guys. That has plunged from a peak of over 12,500 per month down to now, well, certainly under 5,000. While houses, you can see there's been a little jump up in houses. And, well, we can thank HomeBuyer for that. You know, it's having an impact on it. I was actually talking to a gentleman yesterday about HomeBuyer. He was asking if, we were talking about a project that I was going to help him with before, but he kind of, he's taking his time to jump in because, well, he's concerned about the state of the economy, understandably. And I was telling him, well, you want to think about it. Do you really want to rush and not get something you would absolutely want for 25 grand? Is it worth it? For how much you're going to spend? You're going to live with this thing for the rest of your life. So you need to think about these things, these bribe monies. Is it worth it for that discount? So we can see just in building approvals, the multi-res sector, the apartments have taken a hit. Before that, it was all of the construction issues that were identified again and again and again. You had the cracking in Opal. Then we had the triangle of fail between Mascot, Sugar Cube and Zetland, all there in Sydney. You've got all the ground contamination issues just heading towards Botany Bay. You've got fire, flammable cladding issues around the whole country. So I'm not surprised. I'm not surprised that people are, well, not jumping into apartments. But of course, the industry is responding. That first home buyer, the first home buyer support, the 10,000 extra deposit places, the home builder scheme obviously isn't helping the apartment sector. Now, as an architect, I have not worked much in the apartment sector simply because, well, the developers are interesting characters. I found in the few projects I've worked with them, it's difficult to make a profit. And this may shock you. This may shock you, but I kind of want to make a profit when I do business. It feels like some architects don't. It really does. Yeah, artists, but still. So, the federal government's extended plan to help first home buyers onto the property ladder through newly built homes will not be enough to jumpstart Australia's weakening apartment markets, experts have warned. I can't say, would anyone be surprised at that? That it's, this sector's in trouble. It's in trouble. It's driven in many regards by investors. Investors are buying into these things. We've seen prices for investment-grade apartments in Sydney fall to 15% as people are getting out. But you've got international students, well, they're not coming anymore. Now they're warning each other not to come to Australia. You've got tourism down the gurgler. That's a $60 billion part of our economy that's now taken a huge hit. So you're going to get all these Airbnb apartments as well flooding the market. And that's going to put downward pressure on rental yields. And would you really, for a first home buyer, would this be the type of thing that you'd want to get in? Because you've got to remember, when you're buying into one of these beautiful towers, you're buying into the political structure, which is the body corporate. And that's a whole other world of potential risk. At least with a small specky, if something goes wrong, most of the time you can fix it yourself if you really have to. You can learn how to do plastering. You can fix a tap or something like that. If you've got major structural issues, well, then you've got to replace it. But worst case in something like this, we've seen the issues. So, an extra 10,000 first home buyers will be able to access the government's first home loan deposit scheme with increased price caps on conditions they buy newly built homes, including apartments. So you could get into a newly built apartment. Okay, good on you. Just don't buy it off the plan, guys. No matter what you do not buy off the plan. I can't believe people are still recommending that. The scheme enables first-home buyers to get into the market with a deposit as low as 5% while avoiding lenders' mortgage insurance, with the federal government acting as guarantor on the loans. Now, we haven't reached the point of in these states where you've got their government-controlled banks just buying up every single mortgage because they want everyone in housing, and it just blew up. It just blew up. That's the risk. You don't want the government guaranteeing things. It's dangerous because then there's no risk. The banks don't care. There's no risk. And then it'll just keep snowballing. Fortunately, it's capped at now 20,000. And they're running out of people to take advantage of them. But, I mean, you can see here, there'll be calls for it to increase. It'll become a political football, and more people will want these schemes increased. They want more government intervention, more government propping up the market. They don't want the market to adjust and have a realistic response to the environment and the situation. So, the new inclusion of apartments in the scheme will give first-home buyers more options when buying, particularly if they want to stay closer to the capital cities. So you can see here the extended first-home loan deposit scheme price cap. So in New South Wales, it's $950,000 in the capital city or the regional centres. The rest of the state is $600,000. And if we jump here, we can see that from CoreLogic, the cost of housing, the median price in Sydney is $866,000. 950 for a first home. I mean, that's just insane. Nearly $1 million, guys. Nearly $1 million, and you got to service it. You'd want to hope that our cash rate stays at insanely low levels. Victoria, it's $850. Queensland, $650, and even that. All of these are above. Well, that's above the median. If we have a look here. If we have a look here in Brisbane, median's 500, 650, guys. 650. Wow. Oh, Queensland. The rest of the state is 500. WA is 550. SA is 550, 550. So these are all above the median. So, even Sydney. So what does that tell you? But Collier's managing director for residential, Peter Shittenden, said, while every stimulus package helped, it was not what the industry actually needed. It's not a game changer, it's a contribution. It's helpful, but it's not going to create as many jobs as the stamp duty reform. Reforming state-based land taxes was a better economic stimulus than further increasing the federal government's scheme, he said. Okay, so here, there's calls now to introduce a land tax here in Australia as opposed to stamp duty. Right now, we have to pay stamp duty when you buy and sell a property, to get a stamp. It's frustrating. Never saw them actually stamp the paper. But still, and they want to change that. There's calls to change that for a land tax to allow more flexibility for people to move around and change properties without having these huge costs. But then you've got a yearly land tax associated with it. What would you prefer, everyone? Let me know in the comments. Would you rather pay in one big chunk, or would you rather pay, an ongoing land tax? What's going to be harder? In some regards, I don't mind the big chunk. That it's done and dusted. I'd hate them now to, if they don't grandfather it in, make us all start paying land tax, even though, and on top of the stamp duty we've paid. That's what they do. They'd screw us. You know it. We know that's what the politicians would do. What will help the apartment market is a state-based move that will be a reform of the archaic stamp duty laws, he said. That is key to resurrecting the construction industry, and that's where the states need to contribute. In a way, it's a silver bullet. Well, you also need to restore consumer confidence in construction. You've got the Shergold-Weir report, which had a whole series of recommendations that were completely ignored. I've done videos here about looking at suggestions of multi-certifier engagements to address some of the issues. I'm concerned with design and construct resulting in lower quality products and cost cutting. And particularly now when we're facing a recession, there's an increased risk of that too, with builders cutting corners. So, is there any confidence in apartments? Or have people forgotten about it? Maybe they have. It's kind of disappeared from the news lately, hasn't it? The apartment market in the capital cities, including Sydney and Melbourne, are expected to take a hit for years to come as the pandemic-induced recession sees demand drop dramatically. That's come on the back of all of these other issues. Max Schiffman, National Vice President of the National Development Association Group, Urban Development Institute of Australia, said an extension and expansion of HomeBuilder was what was needed to help the apartment market. So there's just more calls from these special interest groups, these lobby groups, to, to want government handouts, government grants to prop up their industries. They've made a lot of money in apartments, guys. We have, if we can, I'll bring up this chart. This shows foreign investment in the apartment sector. Have a look there at 14-15. Look at that spike. It overheated big time in that sector. And I would argue that overheating has contributed to a decline in the quality of product that we're seeing in the construction sector. Because when you have less time, you've got less time to check, less time to review. Everyone's worked on a project where you've got in crunch times and you've got to make compromises. So the Home Builder program is due to end on December 31 and has a series of price and income thresholds to meet the requirements, precluding many city applicants from accessing the $25,000 grant. An extension of the time frame and widening of the criteria would help stimulate local demand across the states and territories for apartments at a time when international demand has reduced dramatically, Mr. Schiffman said. We would certainly like HomeBuilder to be expanded to apartments and townhouses so it can apply to a larger range of people, he said. At the moment, you've got caps on the value that you can apply for, and there are caps on income ranges which limit the application. Mr. Schiffman said the residential construction sector could minimize the economic downturn and enhance the recovery after builders last week warned of a construction bust if the scheme was not extended into next year. Well, see, this is the thing. All of these schemes are just moving future spending back. Everything is moving. I mean, that's all the government intervention is. Them pulling future economic activity forward now artificially in hopes that they can avoid a recession. When we need recessions. In this boom-bust cycle, in this interventionist Keynesian approach to the economic management, they're trying to manage an emergent system with things beyond their controls, but still they think they can. And they're not letting the market correct. They're not letting prices go down to a level where, well, they should, where the market will respond. They're intervening. And, well, there's no political will in Australia to let it respond. I think too many people are tied up in it. Most of our wealth in our nation is now tied up in our property. 57%, everyone. Lachlan Walker, director of Brisbane-based residential marketing business Place Projects and Place Advisory, said the house and land market had fared better than apartments under Home Builder. Those 10,000 spots are going to disappear pretty quickly, Mr. Walker said, adding that once it ran out, first home buyers would sit on the fence to assess their situation. Is it going to be like the solar panel industry in Victoria, where you've got such generous government grants, and that's essentially putting a cap on the number of sales that can happen in the industry, and people are not jumping in? They're waiting. If they miss out on 1 month, they'll jump for next month. Maybe if they miss out on these 10,000 spots, they'll jump for the next 10,000. Supply is on the way down because people are not developing new products. And there's a lot of it out there. Well, that means oversupply. Property Council Australia Chief Executive Ken Morrison has also welcomed the extension of the First Home Loan Deposit Scheme, describing it as a double dividend that would help first home buyers enter the market and boost construction activity and jobs that the economy needed. This is particularly welcome news for apartment construction, which has been hit especially hard by the impacts of the pandemic. Apartment approvals fell 11% in August and 18% for the year, so anything that supports jobs and activity in this sector is very welcome. He called on the federal government to extend this to the Home Builder scheme. It's very pleasing that the government has solved this challenge for off-the-plan apartment purchases. Oh, wow. And we encourage them to apply this solution to the successful Home Builder scheme. Now, it's concerning, everyone. It's concerning that is the issue. It's just more calls for stimulus, more calls for, well, purchasing. But here is another article. Here's the alternative side. Bargain hunting investors are circling inner city Melbourne's unit market. So you've got one side they're complaining about apartments getting hit, and here we've got bargain hunters that are diving in. Everyone, I'm just writing down the time. So bargain hunting investors are already circling inner city apartments waiting for a cheap buy as Melbourne's pandemic hit property market returns from stage 4 lockdown. Agents have reported an influx of inquiry from investors hoping to take advantage of desperate owners with units sitting empty and wanting a quick sale, with some making low-ball offers. And I heard of that in the comments. People are saying how they're making low-ball offers to take advantage of the situation. This is how a market naturally adjusts. If you've got oversupply, prices need to come down. They need to come down. That's fine. Then people can find bargains, or people can invest, and then they can grow their own savings and wealth from that. Oh no, property goes down. People buy into it. Then in a couple of years' time, in several years' time, those assets start to get more value. Then people can maybe borrow against that and invest in a business and can grow and can save, and then the government can get their future taxes, rather than pulling future spending back. $1.1 trillion of government money pulled back to now in the form of debt to kind of prop up these industries artificially, to keep these prices artificially high. But discounted properties were still far and few between, they say, as owners continue to sit on their hands and wait out the hiatus of international students and short-stay tourists. In Docklands, buyers were starting to make low-ball offers on apartments, although they were not being accepted, Lucas Real Estate Director Baden Lucas said. There haven't been investors listing properties in droves, Mr. Lucas said, but certainly we haven't had people that are moving between investments. So, you've got to remember, we're in a completely artificial state right now. You've got JobKeeper propping up so many businesses. And now with the new budget, we've got JobMaker credits going to so many businesses that are going to prop them up. So will the market actually correct? Has the intervention been so much that it won't correct? Well, that's the question. That's what we'll have to watch. We won't know until some of these mechanisms are removed. They're hoping they can just keep the economy chugging along until external activities, pick us up again. And they're betting on a vaccine next year. And what if it doesn't come? Well, then they can blame that for the reason as why the economy is still chugging. Smart politicians. While the number of new apartments listed for sale surged by 379.7% over the week between September 28th and October 4th, and 204.1% over the month, Domain data showed apartment listings were still significantly down on the same time last year, with 38.6% fewer than the last year's spring selling season. Some agents said they were surprised that the listings had not flooded back, expecting there would have been distressed sales to hit the market once Melburnians were able to inspect properties again. But inner city hubs like Sunnybank, Docklands, and the CBD apartment owners were not rushing to the market. The lack of stock, coupled with the demand for first home buyers taking advantage of government incentives, downsizers, and even upgraders looking for more bedrooms or a home office, were helping the inner city market, according to Kay and Burton, South Yarra associate Tim Blackett. Anything sub 1 million is selling really well, he said. Mr. Blackett, who sells property in Southbank, said he had not seen any distressed listings of apartments, despite the rise in listings in recent weeks. On the contrary, we've had some investor clients looking to buy into the market, he said. They want to buy into newer blocks where agents may be a little bit more negotiable on price. The rental market had seen many of the apartments used for short stay accommodation in pockets of Docklands, where they are allowed move on to the long-term rental market rather than being listed for sale, Mr. Lucas said. Investors are looking for a better return than they have in their superannuation funds at the moment. Bell Property, Albert Park's Kendall Belsley, said she was surprised there hadn't been a flood of inner-city apartments on the market, even though there had been recent lift in listings. Most of the apartments I'm selling at the moment are on behalf of investors, she said. I was expecting to see more properties hit the market, but there's quite a few people still sitting on their hands. Well, they don't have to sell yet. Remember, why would you sell now if you think everything's going to be good, you think the government's going to come save the day, and you've got a mortgage holiday? Why would you sell now? Remember, we're not going to see the impact of all of this until March. We'll probably see an influx towards the end of the year, they're saying. AMP Capital Chief Economist Shane Oliver said while JobKeeper and JobSeeker payments and bank mortgage holidays would continue to help out apartment owners facing dire financial circumstances, he was expecting distressed sales would hit the market in Melbourne as these support measures were wound up. There you go. That's the reason. If you're an apartment owner in the inner city area, maybe you're feeling that you don't have to do anything because there's no real pressure on you to do it now. So, are these people just putting their heads in the sand? Are they putting their heads in the sand and not worrying about the situation? I wouldn't be surprised. I could see that happening. People thinking it's all going to come good. Everything will be better. That's what I'm thinking. The mortgage holiday and income support measures will come to an end. That crunch point may come later this year or early next year. Melbourne's property prices, which have fallen by 6% from their peak early this year, could be expected to lose another 5 to 7% off prices due to the economic hit of the virus, he said. Fewer international students and migrants to Australia would also hit Melbourne's property market over the next 2 years. So, you can see buyers are trying to find bargains, but they're not materializing yet. They're not materializing yet because, well, we have all of these interventions. And there's one more article I want to have a look at. This is, well, from Property Observer about danger zones. And while I jump to that, I'm going to have a shot. So these are probably the suburbs to watch. I'll just check the time. And what we have here is the top 10 danger zones for apartment oversupply in Australia. Because remember, we saw the article, first one from Domain, where there were the lobby groups were calling on the government to support their industry because they can save the economy, guys. The apartment developers can save the economy. They can be the heroes that can save us all from a recession, from the market. Oh, the bad market. We can't have recessions. And I understand, guys, that recessions are tough, but they're necessary because there are opportunities there. That's how people can maybe start. It clears away some of the established businesses that are probably just not competitive to allow younger businesses to come up and thrive. You don't want the overgrowth killing out the undergrowth. But it doesn't seem to be, there's no political will for tougher times anymore. Roose Hill in Sydney's Hill District is expected to see its amount of units grow by over 200% in the next 24 months. And this is just written in September. Roose Hill. It stands out in RiskWise's top 10 danger zones in Australia for high settlement and cash flow risk. Roose Hill is set to see a further 1,661 new apartments in the next 2 years. That is just crazy. We've got the same thing here in Brisbane, in South Brisbane, just with the flood of apartments, everyone. It's just nuts. Just how many are there? Rents have been one of the biggest issues during the pandemic, with inner-city apartments in particular seeing significant declines. Unit rents have been hit the most, with falls over the last 3 months in both Sydney and Melbourne reaching 2%. Buyer's agent Rich Harvey said buying new apartments in outer suburban areas like Roose Hill made no sense. While it may be nice to have a shiny new kitchen and bathroom, there is a significant downside price risk to the supply of land for further developments. As the supply of land for further developments is plentiful. Investors and home buyers are far better off seeking apartments in locations where land supply is very low and demand for property higher. It's all to do with location, location, location. And here's the thing, even if you're buying one of these apartments, everyone, you're competing with everyone else in the complex, let alone other towers shooting up all around. Rents... Unit rents have been hit the most, with falls over the last 3 months in both Sydney and Melbourne, reaching 2%. Investors and home buyers are far better off seeking apartments in location. We've already read that. Sorry, I'm jumping around here. And here we have the state, the postcode, and the suburb. So this is the list. So in Victoria, Melbourne, so new units, 4,744. And we're seeing an increase to 13.6% in the next 2 years. Docklands, a 12% increase. Mascot in New South Wales, a 13.3% increase. Roose Hill, as we said, a 200% increase, everyone. 200%. Wow. Parramatta, 13%. Gosford, 72.9%. Darwin, 32%. 32% increase in Darwin. And remember that video we looked at where we saw the $700,000 apartment fail? The guy bought an apartment in Darwin with structural issues, with leaking issues, and he can't get it resolved. He bought it off the plan again. Why are people buying off the plan? Here, West End, as I was saying, South Brisbane, 26% increase now, and it's already flooded. You drive down there. I used to have my office down in West End, or South Brisbane, in the same area. It's just gotten decimated. Traffic was a nightmare. They're having to build new schools there because they thought you get downsizers moving, but no, it's families. They're moving in. Surfers Paradise, 14%, 2,779 in Surfs. I don't know why you'd want to live in Surfers, but maybe just younger, I guess, wanting to party and have fun. Adelaide, up 12.9%, 1,266. And so you can just see the number of apartments that are at risk. The table lists the riskiest areas in the country in terms of oversupply, based not only on the supply itself, but on low demand for rental apartments in relation to that supply. So here we have these are probably the places to avoid or to keep an eye on for bargains. And it seems to be, they're sitting on their hands now because they don't have to, because of all of the interventions in the market. But these are the danger zones. Sydney's Gosford will see apartments grow by 72%. Melbourne has the highest number of new apartments, some 4,777. Riskwise Chief Executive Doran Peleg said property investors should be extra cautious for the high degree of risk associated with off-the-plan units that has further increased due to the pandemic. I don't know why. Why would someone go off the plan if they're in a market where apartments are generally considered to go down? The equity risk from the risk for price reduction that already had been high prior to the pandemic has further increased. The pandemic has also increased materially the cash flow risk as vacancy rates per square metre are at an all-time high, peaking in May at 16.2%. In June, they dropped slightly at 13.8%. He said that the high-profile issues around cladding and defects had created enormous reputational damage across the entire industry. Because of this, investors had lost interest in high-rise unit developments and were turning to safer house and land packages suitable for families. When I went to a recent event at my university, an alumni event, the university was hitting us up for money, and you could tweet questions to the panel. There's this panel of guests, and I was saying, how can architects, because it was an architecture event, the architecture school, how can architects as a profession restore confidence in the construction industry or in the high-rise industry? And the questions that were answered were, what's the gender of a building? So it's kind of lost my faith in the profession a bit, really, with what they're focusing on. Peter Wargent, co-founder of Alan Wargent Property Buyers, said that units, particularly off-the-plan purchases, still carried a high level of risk of significant price reductions. And we've seen that happening more and more, where people are buying off the plan expecting property prices to shoot up to the moon, and it never happens. Or that they're buying off the plan, they're signing a contract, and they're at risk of losing their deposit until they chuck additional money in. Property was falling. Remember, land, when it went down by up to 20% in Melbourne, you had people trying to sell these blocks on Gumtree. Same thing can happen with apartments, because they'll go you on the contract. They'll take your deposit and they'll sue you for potential loss, and then still sell the apartment and make money. He noted that uncertainty in the economy had been heightened in 2020, and that buying into oversupplied areas at a time when international borders are effectively shut would only serve to compound risk. He said the rental market had been weak for inner-city apartments due to the absence of international students and tourists. That were possible buyers should look towards more supply-constrained markets and assets with a genuine scarcity value. Because, it's a good point. These apartments aren't scarce, a lot of them. You're competing with hundreds of them. Over the medium to long term, it's the land value component of the asset that does the heavy lifting for you, and therefore buyers should look for the high land to asset ratio. The unit oversupply issue has been with us for some years now, and outperformance has mainly been in family appropriate dwelling types in markets where demand is consistent with new supply has been restricted. So there we have it, everyone. there we have it. So, the real estate market, the real estate apartment market really is in a crisis. You've got lobby groups calling for more government intervention and support. You've got buyers trying to swipe on bargains in Melbourne. We've also heard Sydney prices that were contracting. And you've got danger zones of significant oversupply in apartment products. What do you all think, everyone? Would you jump in? Are you a first home buyer looking at apartments? I remember when we were looking around for a rental apartment, and we saw one. I looked in when Rachel was pregnant with our first child and go, we'll buy a shit house before we go in that. And we did. We got a fixer-upper. Anyway, guys, thank you all for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions in the comments below. Do you agree with the take here, these different articles? Or are you with our property spruiker yesterday who was saying that we're facing a national boom, guys? Property's going to boom. Or will it be a kaboom? Are you trying to find an apartment bargain? Would you want something? Maybe more established. Maybe access to universities for your kids one day. As always, thanks for watching. Like, share, and subscribe to the channel. If you're a fan and want to support the content I create, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, guys. I will see you all in the next episode.